Investing in the stock market, a beginner's guide to building wealth. Are you tired of living paycheck to paycheck and want to take control of your finances? Investing in the stock market can be a great way to build wealth, but it can also seem overwhelming for beginners. Don't worry, we've got you covered. In this beginner's guide, we'll walk you through everything you need to know about investing in the stock market and how it can help you achieve financial freedom. Get ready to learn all about stocks, bonds, diversification, and much more. Let's start building that wealth. Investing in the stock market, a beginner's guide to building wealth. If you're new to investing in the stock market, the process can seem daunting. However, with a little research and guidance, you can quickly learn how to start building wealth through stocks. There are many different approaches to stock market investing. But one of the simplest and most effective ways to get started is by investing in index funds. Index funds are a type of mutual fund that track a specific market index, such as the S&P 500. When you invest in an index fund, you're effectively buying into a basket of hundreds or even thousands of individual stocks. This diversification helps to protect your investment from the volatility of any single stock. Another key benefit of index funds is that they tend to have low expense ratios. This means that more of your money goes towards actual investment growth, rather than fees charged by the fund manager. If you're interested in getting started with stock market investing, index funds are a great place to begin. With a little research and patience, you can start building wealth for the long term. Introduction to the stock market. The stock market is one of the most popular places to invest money and grow wealth. It can be a great way to build your nest egg for retirement or other long-term goals. But what is the stock market and how does it work? This guide will introduce you to the basics of the stock market and how you can start investing to build your wealth. We'll cover topics like, what is the stock market? How does the stock market work? Why invest in the stock market? How do I start investing in the stock market? The stock market is a collection of markets where stocks, pieces of ownership in businesses, are traded between investors. It usually refers to the exchanges where stocks and other securities are bought and sold. The stock market can be used to measure the performance of a whole economy, or particular sectors of it. Most people think of the stock market as a place where you can buy and sell shares of publicly traded companies like Apple or Google. And while that's true, there's actually a lot more to the stock market than just buying and selling shares. For example, the stock market is also where you'll find bonds, mutual funds, and other investment products. Despite its reputation, the stock market isn't always risky. In fact, with a little research and some patience, investing in the stock market can be a great way to build wealth over time. Why invest in the stock market? There are many reasons to invest in the stock market. For one, it offers the potential for high returns. Over the long term, stocks have outperformed all other asset classes, including bonds and real estate. Another reason to invest in stocks is that they offer diversification. By investing in a variety of stocks, you can reduce your risk and improve your chances of achieving your financial goals. Finally, investing in the stock market is a great way to build wealth over time. By reinvesting your dividends and reinvesting your gains, you can compound your returns and grow your wealth exponentially. How to start investing in the stock market? When it comes to investing in the stock market, there are a lot of things to consider. But don't let that overwhelm you. Starting is actually quite simple. The most important thing is to develop a plan and to stick to it. Here are a few tips on how to start investing in the stock market. 1. Decide what you want to achieve with your investments. Are you looking to grow your wealth over the long term, or are you looking for more immediate returns? Your investment goals will determine what types of stocks you should buy. 2. Consider how much risk you're comfortable taking on. Remember, the higher the risk, the higher the potential rewards, but also the greater chance of losses. 3. Get started with a small amount of money. You can always add more later, but it's best to start small and gradually increase your investment amount as you get more comfortable with stock market investing. 4. Educate yourself on the basics of investing. There's a lot to learn, but it doesn't have to be complicated. Start by reading up on some basic concepts like diversification and asset allocation. 5. Choose an investment account that suits your needs. If you're just starting out, a basic brokerage account will do. Later on, you may want to open a retirement account like an IRA or 401k. 6. Start buying stocks. Once you've done your research and found some different types of investments, there are many different types of investments that you can make in the stock market. Each type has its own risk level and potential return. The most common types of investments are stocks, bonds, and mutual funds. Stocks represent ownership in a company and give you a share of the profits or losses that the company makes. Bonds are loans that you make to a company or government and receive interest payments on. Mutual funds are a basket of different investments, including stocks and bonds, which is managed by professionals. Each type of investment has its own set of rules and regulations. It's important to understand these before investing your money. Stock market strategies for beginners. There are a lot of different ways to approach the stock market, and it can be overwhelming for beginners. But there are some basic strategies that can help you get started on the right foot. One popular strategy is dollar cost averaging, which involves investing a fixed sum of money in a stock or stocks at regular intervals. This can help you build up a position over time without having to put all your eggs in one basket, so to speak. Another strategy is to focus on companies with strong fundamentals. That means looking for companies with good management, healthy financials, and solid growth prospects. These companies tend to be more resilient during market downturns, so they can be a good place to focus your investments. Of course, there are many other strategies out there, and you should always do your own research before investing, but these two can help you get started on the right track. When it comes to investing in the stock market, there are a lot of different strategies that beginners can use to get started. However, it's important to remember that no one strategy is guaranteed to work, and it's always important to do your own research before investing. One popular strategy for beginners is to invest in index funds. Index funds are a type of mutual fund that track a specific market index, such as the S&P 500. These funds offer a diversified way to invest in the stock market, and they tend to be more stable than individual stocks. Conclusion: investing in the stock market can be a great way to build wealth over time, but it's important to start out with a good understanding of the basics. This article has provided an overview of the different types of stocks and strategies for investing, as well as some tips for getting started. While there is no guarantee that investing will lead to financial success, taking the time to do your research and understand how the markets work can help you make informed decisions that could one day pay off big. So why not take advantage of this opportunity today and get started on building your own personal wealth?